So you've never invested in the stock market before and you think that it's quite hard to get started. Well, actually, I'm going to share with you my 5-step process on how you can get started right now in investing in the stock market. How's it going, guys? Ryan here and welcome to another investing video, and today we're talking about how you as a beginner can start investing in the stock market with my simple 5-step process. And in fact, you'll realize it's actually a lot simpler than it seems. But before we get started, guys, please remember to like the video. It helps me out so much with the YouTube algorithm, and subscribe for more investing and stock market content. Especially if you're new here, you'll really get some value out of it, I hope. And let us know down in the comments section below if you did find this video valuable at all, and if you've got any other tips for investing in the stock market in general. And with that, guys, without further ado, let's get straight into the video. So kicking off with step number 1, guys, and it's the most obvious step here, and that is you've got to actually save some money up to invest. But the real question is, how much money do you need to save in order to start investing? And this really comes down to the individual, but my recommendation would be a few $1,000s. $5,000 is probably a genuine amount in the sense that you'd be able to effectively cover your brokerage costs, and I'll explain a bit more of that in the future, but also make some genuine returns on the stocks that you've invested in. Now, my one caveat here is make sure that is $5,000 or however many $1,000s of disposable income that you are willing to lose. The thing a lot of new investors or traders don't actually understand is there is a very high likelihood that you will lose the money in the first few years of investing in the stock market. This is effectively because you are learning. So step number 1, make sure you have enough money, let's say $5,000 of disposable income sitting there ready to go that you are willing to lose in the worst case scenario. Step number 2, choose a broker. Now, what is a broker? A broker is effectively the middleman who transacts between yourself and the stock itself, the company that you are trying to invest in. So for instance, you may have heard of platforms such as eToro, Robinhood. The one I personally use is CommSec, which is Commonwealth Bank's app. And effectively, the broker is the person, as I mentioned, who is transacting the actual shares themselves. Now, the broker, depending on who it is, will take a fee out of every single transaction. So every time you buy shares or every time you sell shares, they will take a fee. Now, depending on the broker that you use, this fee can vary. Now, for CommSec, it scales up, for instance, as you increase the amount of money that you're putting in. There is certain gates that you have to hit for that next level of brokerage to be hit with, but it's $20 at the moment, roughly. Now, if you're looking at some other sites or some other brokers, a lot of them now actually charge free brokerage. Now, I would warn you, the only issue in this circumstance is you're not paying a fee to use these providers. As a result, they're probably not as reliable. While yes, as a smaller account, it is great to not be paying those additional fees every time you make a buy or sell transaction, but you don't have the reliability of something of the size of CommSec or, NAB Trade, where it's backed by a larger company. So you've finished up and chosen your broker. Now, step number 3 is to choose your investing style. And there are a lot of investing styles out there. The main one that a lot of you will be used to hearing about is, long-term set and forget and gain dividends over time. That is the safest form of investing, but may not necessarily present you with the returns you're after. Instead, you could be doing a bit more risky investing and investing in micro caps or small cap companies, which are effectively companies worth under 500 million Australian dollars, instead of those larger blue chip companies which will pay dividends, which are typically multi-billion global international companies. Now, this really comes down to what is your risk profile, what is your appetite to be engaged in investing. If you just want to set and forget, those bigger blue chip companies may be a better option for you, or something like an exchange traded fund, also known as an ETF. where it's effectively a conglomerate of different shares put into one stock code, and effectively what you're doing there is you're buying one stock code on the ASX or whatever I suppose branch that you're using, but then effectively you're investing in 20 or 30 companies that have a certain sort of outcome. So you can focus on ones which have a dividend investing ETF. So basically the aim of that ETF is to pay you dividends. Or alternatively, you could be investing in something where it's growth, and the key aim there is for those stocks to increase in value, in market capital over time. Now, if you, as I mentioned, want to do something a bit more risky, look at the smaller end of the market. Your risk profile needs to be a lot higher because you could lose a lot of money and quickly, but alternatively, you have those massive gains that you could potentially achieve as well. Now that you've chosen your investing style, what we're looking for now is the sector that you want to invest in. If you're investing in ETFs, typically they're probably across a lot of different sectors, unless you're investing in something such as, a commodity where it's very much focused on, let's say, iron ore, for instance. But what you want to do is effectively pick the sector that you want to invest in. And my general tip for choosing the sector that you want to invest in is, what do you know about? How can you use your competitive advantage, your brain, on how to pick stocks that will be increasing in value? So for instance, if you have been, as I mentioned before, in the commodities game, in the mining industry for an extended period of time, maybe this is the best industry for you to choose. If you're in IT, maybe you want to be looking at something, like fintech. If you're a doctor, maybe you want to look at the biomedical sort of side of things. Pick the best sector that is suited to your strong suits, which is what you actually understand. And it may be something that's completely unrelated to your career, but at least you understand what is going on. This will basically put you ahead of the rest of the people who don't have a clue of what's going on when they're starting out, and make you a better investor in the first place. Moving on to the fifth and the final step, and that is choosing the stock or the stocks that you want to invest in. If you're using the rough amount of about $5,000 that I recommended previously, if you're doing individual stocks, I only recommend buying into one or two stocks. With that sort of money, you're going to spread yourself too thin if you're investing in multiple companies. The only exception to this is if you're investing in ETFs, and that is because effectively the price of the ETF will rise as that market rises, or whatever the goal may be. But invest in one or two stocks in the area that you're interested in. I'd tend to probably go for two if possible, just purely due to the fact that you don't want to put all your eggs in one basket. You want to minimize your risk as much as possible. Make sure what you do prior to investing in these stocks though is do your research. I've got plenty of videos that are free and available on YouTube that teach you what to look for when investing in a company, and how to make sure you've invested in a company which is better than the rest, and hopefully one that is going to be the next market leader. So with that, guys, I hope you enjoyed the video, and I hope you got some value and understanding on how to invest in the stock market if you've never done it before. If you did enjoy the video, please remember to like it and subscribe for more content. As I mentioned before, I've got lots of videos teaching you how to invest in the stock market. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.